positive private CRE returns for the first time in 2 years, the lead-lag relationship with listed REITs, and a preliminary outlook for 2025. This month, we are digging into the performance of private real estate. Welcome to the Real Estate Reel from Cohen & Steers. First, total returns for the NCREIF ODCE Index were positive for the first time in 2 years, with gross total returns at 0.25% and net of fees at 0.03%. Income returns of more than 1% more than offset price declines of approximately negative 0.8%. As a review, the ODCE Index tracks 25 open-ended funds that own core commercial real estate. NCREIF began calculating the ODCE Index in 2006 with data back to 1977. Many institutional investors are benchmarked to the index, making it an important market barometer. And that leads me to the second point we're watching, the lead-lag relationship between listed and private real estate. Total returns for the NCREIF ODCE Index, net of fees, have now declined nearly 20% from their peak in 3Q22, with capital returns down almost 25%. Over the same period, absolute listed REIT returns are up almost 33%. Net-net, listed REITs have outperformed the NCREIF ODCE Index by 52 percentage points over the past 8 quarters. This is a significant disparity in performance, but it's also typical of the lead-lag relationship between listed and private. Listed REITs lead in downturns, but also in recoveries. Indeed, it's important to remember that listed REIT total returns were down 25 percentage points in 2022, while NCREIF ODCE Index returns were up 7 percentage points. Fortunes reversed in 2023 when listed REITs were up more than 10 percentage points, while the NCREIF ODCE Index was down more than 10 percentage points. That trend has continued in 2024. Listed REITs have posted year-to-date total returns of 14% through the third quarter, whereas private was down negative 3%. Finally, this begs the question, where does the NCREIF ODCE Index go next? The increase in 3Q24 total returns was modest, but we think it is notable. This is because our analysis of prior index downturns shows that when net total returns turned positive, they remained positive. Bottom line, we believe it is likely that the NCREIF ODCE Index has bottomed, as positive income returns are now offsetting capital returns that are still negative. However, we do not expect a V-shaped recovery similar to what occurred post the GFC. We think the recovery will be inconsistent across property types. This leads us to project low to mid-single-digit total returns for private real estate net of fees in the year ahead. To put this preliminary forecast in historical perspective, the NCREIF ODCE Index has generated 5.7% total returns net of fees since 4Q89, 5.2% over the past 10 years, and 2% over the past 5 years. We see a backdrop most like 1993 as the series cycle emerged from the S&L crisis. The NCREIF ODCE Index generated 1-year total returns of 0.7% in 1Q93, 2.9% in 2Q93, 4.1% in 3Q93, and 5% in 4Q93. There are 2 potential risks to our view that the ODCE Index has bottomed. First, it's possible that appraisers sharpened their pencils in 4Q24 and marked down property prices, pushing total returns into negative territory one final time. We think this is less likely given the auto-regressive nature of the index as mentioned previously. Said differently, objects in motion tend to stay in motion. Second, while not our house view, a spike in interest rates driven by re-acceleration inflation could pose headwinds. That said, the listed REIT market is sending a signal that private CRE may be resilient in the face of higher interest rates. Indeed, the sector is down only around 2 percentage points from its 2024 peak, despite the 10-year Treasury rate rising nearly 70 basis points since mid-September. This underscores that CRE is more than just a play on interest rates. Subscribe to the Real Estate Reel via the link on the screen and tune in next month to see what we're watching.